Hey, what's going on, guys? Welcome to another video, and today we are going to talk about DraftKings Stock, ticker symbol DKNG. And I just wanted to bring something to you all's attention about why I might be a little worried about DraftKings upcoming earnings report that will be taking place on February 18th, right before the market opens. And so let's just go ahead and get right into it. So as you can see, I have Penn National Gaming's earnings report right here. For those who don't know, Penn Gaming is another gambling company. They're a competitor to DraftKings, and they just recently bought Barstool Sports, Dave Portnoy's company. And I saw some things in Penn National Gaming's earnings report that made me want to give a little bit of a warning to investors in DraftKings, because I'm a huge investor in DraftKings. I love the company. I really believe in them for the next 3 to 4 to 5 years. And so let's just go ahead and get right into it. So looking at Penn National Gaming's earnings, you can see here that their total revenue was $1.57 billion, which did beat expectations. The expectations were $1.51 billion, so that was a beat. But here's where I start to get a little worried. So let's just go ahead and go down a little bit. And if you go right here to where it says earnings per share, you can see here that earnings per share was 26 cents. Earnings per share, which was a huge miss of expectations. The average expectation was 46 cents, and some expectations even went as high as 52 cents. And so that's a miss on profitability right there. So that's not good. And then the biggest thing that I think could hurt DraftKings stock is this right here. If you go over to operating expenses, right here, you can see total operating expenses is up huge, absolutely huge from the previous year. The total operating expenses from last year, let me see what this is, in the millions. Yeah, in the millions. So their total operating expenses last year was around 900 million, as you can see right here. But if you look at their total operating expenses this year, it was about $1.346 billion in operating expenses, which means that they are losing a lot of money here. They really are. And so profit they missed, which is earnings per share. Their expenses increased a lot, which that is a bad sign for DraftKings. And the reason why that's a bad sign is because we want to see these companies get closer to being profitable in a few years. And right now we are not seeing that. And that's the worry that many investors have. We want to see them go in the right direction. If they're continuously burning all this money and they're not making enough money to make up for it, then, it doesn't look like they're going to be profitable within the next 3 to 4 to 5 years. And so obviously DraftKings is a much better company than Penn National Gaming. I will definitely say that. I'm sure DraftKings earnings report will probably be better than Penn National Gaming, but still I am a little concerned because we know that DraftKings does have a habit of spending a lot of money, which I'm not all that opposed to it, because we know that the reason why DraftKings spends so much money is because they're trying to take over more of the market share. So I'm not too opposed to it, but I'm just getting you guys ready for what could happen in earnings. Earnings for DraftKings could be bad and the stock could tank even more. I'm just getting you guys prepared now for what's to come. Doesn't mean I'm going to exit my position. Doesn't mean I'm going to give up on the company. I'm still bullish, but I'm just letting you guys know what's to come, because that's just my job here. Now, so Penn Gaming Board of Directors authorizes $750 million share repurchase program. So they actually kind of saved their stock from plummeting. Last time I checked, their stock was only down about 1%. They were able to save their stock by doing a $750 million share buyback. Now, I highly, highly doubt that DraftKings will do that. I highly doubt it. I don't think DraftKings will do that. So I wouldn't expect DraftKings to do the same in their next earnings report. But it is nice that Penn National Gaming saved their stock price for their investors. So, I mean, that's cool. But my main point in making this video for you guys is just so you guys understand that this Penn Gaming earnings was not that good. I mean, they did beat on revenue, but they also, they lost a lot of money too. They weren't very profitable, and their operating expenses are through the roof, especially compared to last year. And so I'm worried that we might see the same thing for DraftKings. And so I would just say get ready to buy DraftKings on a discount at this point, because it looks like that's probably what's going to happen. I would be shocked if DraftKings earnings were way better than expectations, especially when it comes to EPS and different things like that. But, I guess we'll see. But looking at this Penn National Gaming's earnings report, I am not so optimistic about DraftKings. Doesn't mean I'm not bullish on the long term. It just means for the short term right now, for this next earnings report, I'm not so sure DraftKings earnings report will be very good. It's very possible that the stock could tank, especially in this market. I mean, look at Facebook, look at Spotify. Those stocks went to the absolute gutter after their earnings report. That's just the kind of sentiment that we're in. That's the kind of market we're in. So DraftKings reports in about 2 weeks. So yeah, let's go ahead and get ready for it. Looking forward to it. So yeah, that'll go ahead and conclude today's video. Thank you guys so much for watching. Feel free to like, share, and subscribe, and I will see you in the next one.